I'd like to welcome you to our latest video. This is an extremely important one. It basically is our forecast for 2026, and it's going to be a little bit different than we've normally done. First of all, in our views, and this is the big picture, we think we're switching from risk on to risk off. That's extremely important. So we're going to give you when we think you have to worry about the markets. We're going to give you some of our gold and silver thoughts, and of course some good stock ideas. And naturally, we always like people to visit any of our sponsors. Like last year and the year before and the year before, this is trader's paradise. I was a commodity trader, and it's just mind-boggling how the markets themselves are more like traditional commodities or crypto. It's just literally every day one can make a lot of money, or sometimes lose a lot of money. But this certainly will be the case. If you have the skill sets, and most people don't make money, by the way, trading, but if you do, continue. Now, there's going to be a lot of volatility and complexity. Therefore, we are breaking it into three parts. Normally, it's an hour-and-a-half forecast. First, we're going to give the core big picture and a few potential buys. Secondarily, in another 2 weeks, we're going to go in detail into our gold and silver picks. We'll be talking about the market in general, but we'll be giving specific picks. And there are many that are quite profitable and will be quite profitable. And then in March, when we normally do our update, it's going to be a much bigger update because we expect a lot to have happened then, and a reworking of many portfolios in March as well as currently. Whoop. I always love when that thing happens. We always press the wrong buttons, but let's go ahead. Okay, you should know where I'm coming from, and I'm coming as a cosmic value investor. That is to say, I was trained to look for undervalued stocks, hold them until they became profitable, or sell if they became very unprofitable, and once they became overvalued, either to sell them or adjust with trailing stops, writing calls, etc. So we're expecting, obviously, a lot of market volatility. This is our view. We're back to being on top. I mean, here we are at almost 7,000 S&Ps. People are calling for 8,000. People are calling $5,000 gold, $1 million Bitcoin, you name it, sky's the limit. I think there are some issues that we have to be concerned with. So, from an astrological viewpoint, you'll recall last year we had a certain amount of uncertainty and fear in the markets. We still have some uncertainty, but very little fear. It is our view that will return by the spring. It is also our view that whether markets stay in a range, whether they go up further, whether they drop, our strategy is threefold. First, we buy the dips, sell the rallies. Second, we like long-short pairing. And third, we invest for November 2026. Those are our three big strategies. We believe a correction or more is coming this winter. It's very highly likely, certainly well over 50%, probably closer to 80%, and we recommend being prepared, whether it happens or not. The real question is it likely a market top is in or near? Maybe. If so, we see 10 or more percent. I think it's almost a definite. And when? Could be as soon as under 16 days or circled around the astrological February 20th date. And there's a number of trading days around there. We'll recommend being short for those of you that are traders. But basically, certainly February and March, you want to have extra protection. And it depends how much profit taking there is in the first week or two, perhaps earlier. What is the trigger? Less important, but we came up with 7 that we think are potential. And we've seen a foretaste of the first 2. The insane tech reevaluations with AI, The profitability is not going to be there for all those companies. For some, perhaps, but definitely not for all. The Bitcoin reality check, will we break 80 and go to 70 or lower? Certainly possible on a fundamental basis. There's the astrological indicators that there's going to be some fear coming into the marketplace. Uncertainty is being ignored, but that will come back in as well, as we had in the summer. Unfortunately, the market did not let out as much steam as we would have liked last year. The bond market, perhaps the Fed doesn't cut enough. People are calling that with 2 bond cuts, we'll get to 8,000 S&P. Maybe not. It's more likely. We think there'll be recession or recession-like, and certainly a subpar economy in the next 6 months, despite the best efforts of others. And, of course, there's always the usual geopolitical crises and unexpected black swan events. So this suggests to us to reduce risk and protect profits. Many market prognosticators are bullish, and I don't see it. So when will this euphoria end? And there's 2 possibilities. One is almost immediate, that people will take their profits. My guess is that will just be a very short-term drop. But as we get to the astrological timing of February, give or take certain days, the probability becomes greater. So what do we recommend? Low or no margin use? Having cash or margin to buy? Diversifying into private markets, writing calls, buying puts, hedging long-short, very short-term trading. And of course, you're never wrong buying profitable companies with pricing power. Although if they're expensive, it may take you a year or 2 to make money. Again, we're buying investments for the second half of the year, primarily for November on. So our bond view is 1 to 2 rate cuts. We'll see a lot more discounting, dynamic pricing, tariff stuff. We have a K economy, which means some people are doing really, really well, and a lot of people are living paycheck to paycheck, and that's rising. I think inflation and tariffs is going to be coming worries of deflation and stagnation, and that's what we're going to see. There'll certainly be inflation, but there's also going to be deflation. How that's shown by the government is an interesting question. And of course, there will be declining profits for many companies, but not all, obviously. The labor market layoffs has obviously to do with AI, not interest rates. We could have 0 interest rates, and people will still be laid off because of AI. And the labor markets are obviously due to 5 areas: AI, robotics, government, cost-cutting, labor inflation, and the slow economy. So that's going to happen, and that will probably mean that, as we said before, that the bonds will go up to about perhaps 420, 430, and then as we get closer to the end of the year, 340, 350. Whether you like President Trump or not, he's certainly the most pro-stock market president by basically cutting taxes, reducing regulations. It's very positive. And he likes to look at his success with the markets. And if you just look at the success of the markets, and that was your only criteria, which it certainly should not be, he's doing an A+ job at the moment. But we're hearing talks of 5% growth and 2% inflation. I'd love it. I don't believe it. Certainly not in the first quarter or first half of the year. So it's a little bit like the Fed and Donald trading the Cosmos. The Cosmos has been his assistant for the last few months, will be so for a short period of time, then he'll be a challenger, and then he'll be all right again. But at the moment, I think that is something that's not going to last more than at most 2 months, and probably less. Technical analysis is very important, and if you're basically long the markets all year, you're not worried. Basically, 6,800 in the S&Ps is sort of a support area, and of course 6,200, which is a target that many or some analysts have, that we get up to the 7,000 test, and then we go back to the 200-day moving average, and we don't break it. And that's certainly one possibility, or even a high possibility. So at the moment, if you're long, you're feeling very comfortable. If we look at fundamentals, however, markets are significantly overvalued. Looking at the Buffett indicator, for example, and returns are not likely to be strong. On the other hand, if you've been in the market for the last 2-3 years and haven't sold, and you didn't choose very poorly, then you've done very well. And even if you broke even, lost 2%, you'd be in very good shape. So we're not bearish bears, but we're not bullish bulls. Now, people disagree about this. Nobody disagrees that fundamentals don't matter until they do. They just argue what are fundamentals. Our views are very, very different than what is said on the main street. Gold, in my opinion, we'll go into this, is worth about $3,000. And remember, gold's average all-in cost is about $1,500. That's double. Silver, $30, $35. Trading today at $67, but average cost $20. Copper, again. Oil is the one closest to where it belongs. It's got good support around 55, 56. We'll probably be trading in this range. Bonds, and of course, have much lower targets for the S&P and NASDAQ. And our view is we're going to a recession-like scenario with some global deflation as well as inflation. Whether they call it a recession, probably not. As you recall, last time we made such a forecast, both Japan and the UK had 2 negative quarters of GDP. They were in a recession. The US had 2 negative quarters. We weren't in a recession. But it's a recession-like, in a K economy. How do we come up with our numbers? Very differently. Basically, gold is trading as a crisis at the moment, near 4,400. We can go to 5,000. We can go to 3,500 or 3,000. And we can do both. We believe that some of the crises will be reduced, not only in the Middle East, but finally in the Ukraine, and this will therefore take some of the steam out of gold. On the other hand, the currency issues with the dollar will still be there. But nonetheless, we think it's way overvalued, and markets can be overvalued for many years, just as for many years gold was seriously undervalued for many years. So we're staying long precious metal stocks, both as an investment and a portfolio hedge. And our other point is that quality gold and silver stocks will continue to outperform physical gold and silver into 2026. I think this is very important, and one of the most important points I think you should get from this video, if you don't already hold it. Fair value of silver is a lot less. We go about 50% over cost, which is somewhat traditional views. You can also use a 3-year trailing average, which is what investment banks use. Again, with silver and copper, considering we think there'll be a slowdown on a short-term basis, we don't think this is positive for gold and silver. In addition, if silver goes to 100, there'll be substitution. As the cure for high prices, or one of the cures for high prices, are high prices. But we think it's a very good portfolio and investment hedge. Wall Street is incredibly bullish. I don't know what they're drinking. And this can last through February, March, or end next week. But there's a high possibility, or you might say probability, of boom, whether it be 5%, 10%, 20%. It's something that you may wish to be prepared for and not hurt by. So we know markets will be rotating. 2026 winners are not identical with 2025. Most market professionals are doing adjustments or will be doing adjustments. And when Trump became elected, we made 3 definite forecasts which have been pretty accurate and will continue to be accurate. 1, the price of gasoline will drop. 2, the price of eggs will drop. It's down 25% this year. It will go down more. And the bonds will go to 340, 350, but definitely not in a straight line. Three key points I cannot overemphasize. Number 1, it's more profitable to buy precious metal companies, that is to say, to buy wholesale rather than retail. Why pay $4,400 for gold when you can buy it for $1,500? Why buy silver at $67 when I can buy it for $20 or less? That's number 1. We're going to emphasize this over and over again. Number 2, silver trading has become a lot like Bitcoin, and part of the reason is crypto players are entering it. Something that's not been stressed enough in the press is that Tether now is one of the largest buyers of gold and gold companies. Recall AOL buying Time Warner and what that signified for the internet at that time. Think about it. Tether buying gold and gold companies. Why? Number 3, we're not talking about trading because you can trade profitable and unprofitable companies long and short. But we strongly, strongly recommend, if you're a long-term investor, that's at least 2 years, in any precious metal stock that does not sport very favorable economics at $3,000 gold and $30 silver, it's not a safe long-term investment. So we've shown charts like this before with our favorite stock, Visa, our favorite silver stock at the moment. And we didn't bother updating it because it's more of the same. But more or less, whether you make 50% more, 100% more, 200% more, buying a quality stock, and we've presented many of them, will well outperform the physical. So let me talk about Visa. Visa is silver. There isn't anyone who follows me that isn't following the stock or in the stock. And if you only owned one silver stock, and I certainly would recommend owning a lot more, this would be the one, without question. So let's look at a more recent chart. And if we look at year to date, we have the choice of being up 123% for silver. That's wonderful. But I'd rather be up 214%, wouldn't you? And these numbers vary, but it's always much higher. And if you believe silver is going to go up to 75 or 100, I can assure you, you will make more money owning, well, we can't assure you, but we believe strongly that Visa silver will well outperform. If gold and silver stay where they are range-bound, you'll make a lot more money owning Visa or silver. And if we drop a small amount, again, it's only if it drops a lot will you be behind. But then on a 2-year basis, you'll be up again. It's sort of a no-lose proposition as much as you can have. Now, we're going to be having in our next presentation in January, we have a 5-minute interview with Visa or silver. But let me just tell you a few reasons. If you haven't looked at it, it's a no-brainer. This is from their website. Go put it on your trading screen, put it in your portfolio. The main reasons is, first of all, it's going into production. And the 2 times that most mining companies make the most money is first on discovery and second, 6 to 9 months into production. We're very close to that level. So it's a very advanced developer. It's extremely well funded. Another thing you have to worry about is you need money to mine, and they've got it. And they're constantly de-risking. Tremendous exploration upside, and they're doing more and more for it. You can look at it, and it's very undervalued should gold and silver stay where it is. There are lots and lots of reasons, but we strongly recommend you take a look at this company, put it on your screen, track it, and if you want to own any silver, I suggest you that's one of the ones you own. Let's see. I think we... Okay. Another one which we've represented and liked very much is Gold Terra Resources. And we presented this, one of our sponsors, and let's just take a look at their chart. What did they do? Well, you had a choice. You could have made some 66% or 250% owning the stock. I don't know about you, but I prefer to own 250% over 60. This gentleman who's run it has done it before. He's got a very good property, and our targets are certainly much higher than what you're seeing currently on a 2-year basis. Now, these things can go up and down. We recommend strongly you take a look at it. And let's hear the a little presentation here. We're going to see why you might like having this company. And then we're going to continue. These are our two sponsors, and then we're going to continue with a lot more.
Thank you for 2025. Gold Terra, one of the largest land package around the largest unexplored or underexplored gold camp in Yellowknife, Canada. We've been working on it for quite a while now, and thanks to your support, shareholders and investors, we've been able to progress very well in 2025, and we look forward for 2026. Our target in 2026 is, of course, the coal mine. The coal mine, which is very cornerstone to our story in Yellowknife. We do control a large land position, but with the coal mine, it will allow us to go back into production much faster than a greenfield project. Coal mine is a brownfield project that we have signed a deal with Newmont 4 years ago, and we're in the process of acquiring before the end of 2027. The option calls for spending so much money, which we've done already, and finding enough ounces to put the mine back in production. You can see an outline here with the coal mine looking north with the town of Yellowknife. Infrastructures are there, workforce, hydropower, airports, roads, and a very good camp that can yield a lot of ounces. With all of this, if we look at the long section that we have in front of us, I just want to brief you briefly how we're going to be able to target that million ounces. We already, with a different cutoff grade and a gold price of $4,300 an ounce, can have a resource of the Yellow X area about 700,000 ounces at 5 to 6 grams. We're already in a very good position. Our work in 25 also include reviewing the north extension of the Campbell Shear, Zone 103, where about 500,000 ounces was drilled underground on level 3100 or about 900 meters below surface. This is another target that is very, very valuable and will be part of our two main catalysts in 2026. Following our drill program, which will be starting soon, in January, we're going to be drilling 15 to 20,000 meters of drilling. We're fully financed. We're going to do that drilling, come up with an update resource estimate by the end of Q3 2026, followed by a PEA. Gold Terra shareholders are in a good position because our valuation is less than $30 US an ounce. Think about it. It is a bargain on the stock market to buy a share of Gold Terra when the upside is tremendous. We look forward for 2026. Thank you very much for your support.
Make sure you have the ability to buy if and when markets panic. Maybe they will, maybe they won't. But we've had 2-3 opportunities in the last few years. There's a good likelihood it will come up in the next few months. And if you have plenty of reserve power, then don't worry about it. But if you do and you're being overly aggressive, it may be painful. In my opinion, most commodities today are overpriced. Many analysts have different opinions. There's the fear of missing out. Positively, there's a lot of momentum. Certainly, if we're trading gold and silver, the wind is behind your sails. And the most important fundamental driver is it's being under-owned, certainly in the West. So we advise, if you're fully invested, to either take some a small amount of profit taking or write some calls or trailing profit stops. But if you're underinvested and don't have access to any gold and silver as an investment or market hedge, we think it's a good idea to step in. The three classic long-term holdings, and again, this is very conservative, is on gold. It's Agnico Eagle, arguably the best gold company. Silver would be Vizsla Silver. Certainly almost everybody thinks it's a great buy. And as royalties, wheat and precious metals, again, it's only a question of valuation and whether you're buying it for 2 to 5 years. If you're buying it on a short-term basis, perhaps you wish to wait. But these are three that you certainly, if you're into wealth preservation as opposed to wealth creation, belong in a portfolio, or at least many of them. Another set, again, being very conservative because we're going to deal with a lot of aggressive options in 2 weeks. The three biggest ones that we like, Agnico Eagle again, DRD Gold, which is a favorite long-term socially responsible version, and Kinross, a very, very conservative, well-run, basic gold company. There are others, of course. These are three you may want to look at if you haven't thought about them. Silver is shooting fish in a barrel. I mean, I could name 10 companies that are just doing fantastic. The difference about silver at the moment, it's a lot like Bitcoin, as we have the crypto players in it. So we're going to give our recommendations there when we talk about the fundamental, technical, and astrological view of gold and silver in the next 2 weeks. And there are a lot of companies. You can look at what we've presented before. All of them are solid or reasonably solid risk-reward opportunities. And here's a list of, for the moment, of companies we presented in the last 6 months. And you'll see they've done well above average in many cases. So I'll leave it up here for the moment, but you can just take a click. And this is a good selection of gold and silver stocks. We're going to go into a lot more detail in about 2 weeks. But these are all been one that we vetted and presented in New York. Something we do that most people don't like is some precious metal trades, which is there are times we're selling gold and silver and buying gold and silver stocks. This did very well for certain parts of the year. At the moment, it's a little bit less so, and we moved up to about 30% of our portfolio. This is something you may or may not wish to do. I certainly would not be selling gold and silver stocks at this point, but I'm willing to sell and periodically sell gold and silver. No question. 2 thoughts of interesting. Gold still remains positive in January, February, but not as much in NASDAQ. So something we're thinking about, we may or may not do, is to buy gold and sell NASDAQ. We think that's a reasonably safe, but we're not ready to pull the trigger. Silver itself is positive astrologically, but I think the numbers are very unjustified. So one of the ways we're thinking of playing this, we're not, again, it's thoughts, to buy the gold-silver ratio. We think it's worth about 66. It's currently 64. If we get down to 62, we'll try to buy it to 68. Just a trade that you may or may not want to play. And we put this out in some of our trading, both public and privately. Critical minerals, something I had to put in. Obviously, the government's putting a lot of money into critical minerals, and here's a list of 5 we like, 2 of which we presented. American Tungsten did extremely well. Metals Company, extremely well. They both were presented for us in this past year, and the numbers are off the charts. We think they're good again. Whether you want to buy it right now or hold for a pullback depends on your portfolio. But these are 5 companies that we think on a 2 to 3 year basis will do very nicely. So you should at least take a look at them. American Tungsten, Stillwater Critical Minerals, the Metals Company, Titan Mining, and Tungsten Mining. And there are many others that we periodically take a look at, but that's the ones we're suggesting to look at the moment. So be cat-like, accumulate, buy on weakness or on news, your favorite stocks and commodities. Don't think it's going to be la-la land forever. We don't think so. We're going to go talk about fundamental, technical, astrological views of gold and silver. There are many good buys, many, many good buys. And again, even if silver drops 10 to 25%, many of these companies that we recommend will be higher within the next 12 to 24 months. Do take a look at our websites, and certainly there's a lot of good stuff on our YouTube channel, and I think you'll enjoy it. So what are we going to cover? We're going to cover, in the mining space, M&A, which is finally coming out there, distressed turnarounds, gold companies, silver companies, gold and silver companies, gold and copper companies, gold and strategic metals. Lots of way to play the space. We're going to have a lot of detail. It's going to take a lot of time. So we're putting it into a separate video. And in March 21st, we think the markets will have changed. And then we'll be giving two types of recommendations: the value investing ones, dear to my heart, companies that profit in both bull and bear markets, and speculation, small cap, micro caps, huge potential upside. We love it when we get a triple or a 10-bagger or a 40-bagger, but it doesn't happen as much as we'd like. Anyway, the point is we'll give some examples and how you can potentially play this. So that's it, folks. We hope you enjoy it. Please feel free to review this, give it to your friends and colleagues, take a look at some of our earlier ones, and we suggest be prepared.